Okay, folks, we are looking at the British Pound USD pair, and we're going to cover some of the topics and points that we made earlier in the slides. Okay, we're going to look at a particular segment of the market where price had priced in a buy program. Okay, and look at the short-term trading video, and that'll give you better insight on what that is, a buy program and sell program. But assuming we're in a bullish environment, okay, one of the surest ways to nail down the potential for serious pips is to focus on not just the daily range or what the kill zone for that trading session, be it London Open or New York Open or London Close or Asian even. That's too myopic of a view. As a professional trader, you want to have the odds in your favor of catching significant price moves. Okay, and when I refer to stalking the higher time frames and doing most of your analysis on the higher time frames before you even drill down to the lower time frames, less than 1 hour in that regard, it's very important that you understand that the weekly chart and daily chart, they're absolutely gold mines if you know how to mine them, but most individuals don't know really what to do with it. And how to trade the weekly and daily range is exactly how smart money moves in the marketplace. We as successful traders, or those aiming to be such, it would do well for those traders to try to do the same thing that the large institutions and banks do. Okay, and they have this perspective in mind. They don't look at 5-minute charts, guys. Much to your surprise, I'm sure. So let's zero in a little bit and look at how we can use this information. Okay, I have price trained in on the late portion of May. Okay, and this area right here, these two little vertical lines, this is delineating the new week or Sunday's trading. Okay, this is a 1 hour chart. So I'm going to look at the full spectrum of a weekly price range. Okay, this yellow line in here, okay, that denotes the opening price for the new week. Okay, you always want to have that price level in mind, and you need to extend it through the entire week of trading. At some point, it may in fact act as support and resistance or key off of a price swing. But what we're going to use it for is determine a buy or sell zone based on the understanding that we learned on the power of 3, how we understand how in bullish markets, the opening price, when it trades below the opening price, that is usually when smart money is accumulating long positions, and then the profit release portion of the move sees higher prices and then it closes higher away from the low of the day, well, or the period. Since we're focusing on the weekly range, okay, the same premise holds true. If we want to catch the lines portion of the weekly range, okay, the same thing we must have in our minds is where we open at. Okay, if we're bullish overall on the higher time frame, in other words, if we think that price is going to move significantly higher over the coming week or weeks, this method right here is one of my strongest ones in terms of ferreting out huge pip hauls. In other words, I'm talking 250 to 500 pips per week. I don't get on the forums and beat my chest about that because, number one, I don't think you're going to be doing it all the time, and I don't want to sell the idea that you can. You're going to sometimes miss the opportunity to get in at the weekly low, and you may be forced just to trade in the direction of the weekly range. And there's nothing wrong with that, but sometimes I just don't catch it. But I still try to trade with this premise in mind throughout the week. So basically, we're looking at, when we're bullish, we want to see the open of the week, okay? And if price trades down away from the open, somewhere below where the opening is and the low that forms for the week, okay, that's where we're targeting. And we're stalking a setup in this regard. All right, and we already learned that on the slides prior to these examples, that we understand that in bullish market conditions, there is an 80% likelihood that the low of the weekly range will be formed between Tuesday's London Open and Wednesday's London Open. Okay, but many times you'll see the higher low formed between Sunday's Open and Tuesday's London Open. In other words, the high or low is formed usually before Tuesday's London Open, but many times you'll see that between Tuesday's London Open and Wednesday's London Open, it actually makes the higher low between those two points. So if you want to have that set up as a kill zone for the weekly range, it's my suggestion you do that, and I think you'll be very tickled when you see the price action around that time frame. Okay, and vice versa. If you're bearish, you would look for the high of the week to be formed between Sunday's Open and Tuesday's London Open, but many times happening between Tuesday's London Open and Wednesday's London Open. That's the sweet spot. Okay, so if we extend beyond Tuesday's London Open and hadn't formed a significant higher low based on our directional bias, we would really train our attention between London Open and what happens between that time frame and Wednesday's London Open. Okay, and then I think you'll see that the significant higher low for the week should be posted, and then you can trade accordingly. Either take profits on existing positions or look to get in and hopefully trade the remaining portion of the week in range. So how's that look in real-time price action? Well, here we go. We're in a bullish environment based on a lot of different things: key support level, market structure, higher highs, traded down into optimal trade entry in here as we moved away from the new week's opening price. So below the opening price in bullish environments, this is where the slaughterhouse operation is ran by the smart money. They get long and they sell it to the public. The public is going to be thinking this is bearish, so the accumulation comes in and then we move higher into the week. Now, it's very important that you understand that this is not going to be calling the actual high and low of the week. We just are targeting the higher low of the week and try to be positioned during the profit release portion of the weekly range. Okay, new week here, opening price is here, price never really came down. This was all still within a buy program, so short-term trading was the way to go, and measuring your low to high. From low to high, you can get some targets in here just using that range. If we were getting in near the optimal trade entry that's formed from this previous week's low to this high on this week, getting in here, not even getting a high, that's 296, we'll just call it 300 pips. That's 1 week's opportunity to trade using this insight. If you're obviously in sync with the higher time frame and trading short-term trading like we did in our short-term trading module, you can get long in here and look for comparable moves, and that would translate to, again, using not the best fills and best exits, there's 412 pips. So that's a pretty good candidate to haul in some nice pips on using the weekly range premise. Okay, we have the opening here, never really got down below it, so again, that was the reason we would have to look for continuation. All right, we're still in a buy program on a higher time frame, so here's the opening price on a new week. When price trades down below it, we're looking for an opportunity to get long in here. Okay, anytime we below the opening price, below that opening price, that's where the accumulation is going to occur. Okay, so we would look for SMT divergence, turtle soup buy program, buy signal rather. Here's this low taken out. It was a stop raid, runs up. Okay, look in here for optimal trade entry in here. Okay, and then price runs up. And this week, using a worst case scenario fill and getting out in the consolidation, not even the actual high, there's 314 pips potential for that weekly range. So you can see quickly already, we've already seen some huge amount of pips by just focusing on the higher time frame and using this premise in mind. The power 3 on the weekly range, okay, looking for accumulation near the low, below the opening price, and then the range expansion or profit release portion of the move for the range of the week, and then sometime closing around Thursday or Friday, making the actual high of the week and then trading off. Okay, again, we're in the same scenario here where we went long. We're in sync with the higher time frame. So the opening price on this week here was down here, and it had no impact whatsoever because we were in sync with the higher time frame. So using that, if we took profits based on this swing projection of 370 pips, that would translate to this high basically in here right there. So that would be a good idea, taking the swing from this low to the high added to this low gives you this high in here. So absolutely you know, huge profit potential, 600 700 pips over a course of 2 weeks trading with this mindset. Again, we're still within a buy program, and this is how you get explosive Forex profits, by using the higher time frame analysis. And here's the opening price for new week. Price trades down below it. Okay, we're going to find a buying opportunity, get in sync with the higher time frame to trade to the daily range, the weekly range. The weekly range being bullish. Okay, that's our mindset going in. The initial move down. Okay, the initial move down is the engineered decline for a rally that will ensue once the high is taken out. Okay, and I'll explain that in a second. But notice also from this previous week low in here to this high, we have optimal trade entry in here. I'm not going to put the fibs on here. I just want to keep it real pure, just pure action on the Power 3 application to the weekly range. Now, if we get in here and look at, you'll have S&P divergence in here from this low to this low, also coming in at optimal trade entry. And notice also, if this is Sunday, this is all Monday, here is Tuesday. Okay, so we're making the weekly low, okay, on Tuesday, and here we trade higher. All right, let's go back for a moment. I'm going to also talk about that for these previous weeks. We have a weekly low in here. Now granted, we were a little bit lower here, but we made a significant low on Tuesday here this week, and we made the weekly low here on Tuesday on this week. All right, and again, we were in sync with the higher time frame, so the weekly open was very not as useful this week here, but we are still looking to get long. So anything getting long still in the higher time frame analysis would lend well. Okay. Again, Tuesday making the low, traded up higher, and the potential getting the worst case scenario, not even the low. We're going to get in the middle of that consolidation and get out the middle of this consolidation. There's 260 pips for the week. If you're holding for the close, it's 335 pips. Okay. All right. So now we enter in an area where there is profit potential to be coming into the market, where traders are going to take some profits, maybe retrace. And looking at higher time frame analysis in high resistance levels on monthly, weekly, it's very prudent to have that in mind, and you'll be able to see these types of events unfold. And you would see the open trade up. Okay, it made the high first and then traded down, but ultimately we just basically traded down into a much more deeper retracement for another optimal trade entry to get in sync. Okay, to get in sync with the higher time frame, and then you see this huge extrapolated move to the upside. That's why you had that reaction right here. So if you don't look at the higher time frames, you won't see or even learn to anticipate these moves. Now granted, this is Thursday, okay, but the premise is what? We look for the buy signals below to get in sync below the opening price on the week. Okay, so obviously this is below the opening price. We would be stalking higher time frame price swings and trading this pattern here. We learned about that when we went through the module trading the figure. So you'll be able to use this insight. This is the last portion of June into July. And then we obviously went into a consolidation phase, and then again moving back into the buy program. Still we have a low here, trade up to the high, down into a optimal trade entry in here. Also notice that we had a new week traded down initially. Okay, so this is the Judas. Okay, it gets everyone thinking it's going to go lower. Okay, price gave an optimal trade entry right on Tuesday. Off to the races we go. All right, and I know I can feel you guys smiling already, because here's 430 pips, and this is 1 week. Okay, now I'm going to be unfair and say, okay, you're not getting the low and the high. Okay, you're not going to do that all the time. You're certainly not going to do it right away. Now, chances are you can. I'm showing you how to do it, but even if you don't catch this, you just want to trade in sync with that higher time. All right, and we have a new week here as well, and price dilly-dallies around, but we're looking for price action below the opening of the new week to give us our buy signals. Okay, so something down here on the lower time frame, okay, we zero in on to get long. All right, now, and notice also on this week as well, the low was formed on Wednesday. Here's Tuesday, Monday, Sunday, and the low formed. So while this may have been exciting if you were participating in this, okay, and I'm not saying you can't trade that, okay, but focusing more emphasis on the higher time frame analysis will allow you to find these big moves here. Okay, that's how you make a lot of money and you stay alive in this business, because you're going to withstand losses, but you'll be able to do so handsomely when you're able to do this. So here's optimal trade entry in here, and let's say you got you filled here and you got out the consolidation. You didn't get all the way up here at the close. You got up in here. There's 240 pips for that week. Okay, and again, because we're positioned in sync with the higher time frames, you would look to hold and participate in price moves like this. All right, so it helps you get in sync with these higher time frame swings, and trading down here, just getting out this consolidation, that's 770 pips. Okay, and I think this pretty much serves enough in terms of finding the higher time frame analysis and using the Power 3, the open to close relationship, and where accumulation and distribution is participating in the form of smart money, and how they operate on the higher time frames. And you can see these big, huge extrapolated moves and put some serious pips in your account. Okay, we talked about buy programs. Let's look at when markets are in a sell period where it's bearish. Okay, we have market structure here broken down, this low here taken out. So now we're going to be looking for a series of lower lows or a lower swing on the higher time frames. Okay, again, we're looking at 1 hour candles, but we're looking at the range from these double lines to double lines. Between these two double lines is a whole week's worth of trading. Okay, so we would go into a new week. Here's the opening price of the week. Price trades up. So you want to be looking for a sell signal in here. Okay, the sell signal is on the north end of the opening price. You want to be looking for the sell up here. Okay, optimal trade entry in here. Getting short, that'd be one candidate as well. And you can clearly see that price had fallen off. And here's the weekly range. Now it's very important you guys don't just use these examples as the benchmark. Use your own charts. Go through, walk through the price, and here's 450 pips for the week, trading the weekly range. And suddenly I think you guys are going to see that there's no real reason to be in here doing 30 trades in a day. All right, nickel and diamond, trying to get small little pieces of the market move. All right, we have a retracement to a higher time frame optimal trade entry on this level in here. New week, the short is above the opening price. Notice also that the high was formed on Tuesday, this being Sunday, Monday, Tuesday. Now the same thing holds true with when we're trading. We can look for swing objectives. This high to the low right here, this low moved up to the high here. That's a very obvious price swing. Just using that. Okay, if price breaks below here, because we're using this higher time frame analysis, there's your 200% extension right to the pip. Okay, so nothing's changed. All we're doing is applying the smart money concepts that I've been sharing for almost 2 years. We get to March. Can't believe it's been that long. But if you're getting short here and you're trying to trade the weekly range, we're going to say we got filled there, and if we're reaching for 90% of the 20% 200 extension rather, there's 323 pips. Okay, so that's all 1 week, guys, and you did that in 2 days. So 2 days, 320 pips. I don't see too many people on forums giving out that kind of pip haul, and I don't get on there and brag about it, but you're going to be able to see these types of events if you understand how to trade with the higher time frame analysis and using the weekly range to hunt your pips. Here is another one I forgot to put in the chart, but let's do it. You want to extend it to Wednesday. Alright, it's going to be stuck on that candle. You can see price moved above it. Optimal trade entry above the opening price. On Tuesday, there's the high to short from. And in one day, 24-hour period roughly, okay, trading with the daily range, the weekly range, there's 100 and roughly 80 pips.